So in my looking over charts this weekend, I came up with some interesting things I'd like to share with you. So going forward this week, let's just say that quantitative easing is reacted to initially because Congress is not in session, so we don't have to worry about Congress at the moment unless Pelosi brings everybody back and they vote on this bill, this $26 billion bill, and President Obama signs it immediately, and there are all sorts of other things in the bill, and that could be a problem. But for now, we're focusing on the Fed and the impact of what could possibly be coming up the pike in terms of the market's reaction. So here's the S&P, which we've already seen, is in a position to take off, especially after Friday's action. And just so I can draw this in, that's the prior high at 1131, the June high. And if it gets through there, look out. I think you can really take off. Notice the moving averages, which we went over last week. There's a confluence of moving averages here that all were on top of each other a few days ago, and now the shorter term moving average, which here I think I have the 14-day and the 30-day and the 14, the 40, the 14, the 30, and the 50 there, and they're all turning up, with the 14 now turned up and underneath the price structure, just like we looked at, similar to the juxtaposition of the 20-day we discussed many times last week. So now I looked over some sectors, and what pops out at me, interestingly, is the KBE, which is the Regional and Money Center Bank ETF. It has some major money center banks in it, like J.P. Morgan and Bank America and Citigroup and Wells Fargo, but it also has a bunch of regional banks in there, and the regional banks look very, very interesting, and we'll get into that in a minute. Which I'm talking about RF, HBAN, Fifth Third, State Street. So those are the regionals I'll get into. But the other sector that looks really interesting, oh, by the way, that you can see from, just while we're on the subject of the moving averages, you can see the moving averages all clustered together, which is just like the S&P was clustered together a few days ago and broke out to the upside. All the KBE MAs and Friday's action, low high close, suggest that maybe we're going to get a breakout to the upside here in the KBE. Now, the drag on the KBE itself is that the money center banks are still grappling with what financial regulation means, and the selling off some assets or otherwise getting rid of prop desks. And so that's why I'm not in favor of buying the KBE. I'm in favor of buying some of its components, such as those regionals that I just mentioned. We'll get to that in a second. But let's go down to the utility, the XLU. This is the utility ETF, or one of the main utility ETFs. And look at what you had back here. Around the same time you had a confluence of moving averages in the S&P, the utilities were turning up as well, or had this concentration of moving averages, and they're all now on the upside going great guns. So the XLU not only is going great guns, but the XLU is consolidating and looks like it's turning up off of a pretty major base pattern. Now, I don't know exactly, and I'm no utility expert, that's for sure, but I know one thing. You have utilities like Edison, like ED, ETR, EXC, DUK, and PEG, all of which are paying 4 or 5% dividends. Even the XLU, I think, is paying a 4% dividend. That's pretty attractive. You add this chart pattern to it, which, by this time, if you've been listening to me dribble every weekend or every Tuesday night at the live webinar or on the site, you'll know that when these W patterns pop out, they're pretty impressive. So here you have a big W pattern, and the upside target on this is enormous. So this is a very impressive situation that has developed in the utilities. Relatively high dividend. The S&P is yielding less than 2%, and you got the utilities yielding 4%. That's pretty attractive. Now you tack on some capital appreciation possibly, and the utilities look like a home run here. So we'll get to that in a minute. So these are the three comparisons. You can see the three charts. Obviously, to me, the utilities look really dynamic here. The KBE is being dragged back down partially by the money center components, but is being lifted by the regional components, and that's what we'll look at. And the S&P looks like it wants to take off. What in the S&P would do that? Well, there's probably going to be some serious upside action in the energy and some of the financials. But mostly, I think it's going to be the industrial side that takes off. But today, let's concentrate on just the regional banks and some of these utilities. Okay? All right. Here we go. All right. Now, this is Bank America. All right. Let's put some... this is not one of... I'm showing you an example of one of the components of the KBE that dissuades me from buying the KBE or the money center banks. Okay, so maybe Bank America is basing here, maybe not. It's a tough call, but let's put it this way: if I want to put my best foot forward and put my capital somewhere where it has the best chance of success, this wouldn't be my first choice, because it's a struggling chart, and all the moving averages are pointed down like railroad tracks. Not a good sign. All bearing down on this $15, not even 15, the 14.5, 14.40 area. And it looks like Bank America could have a problem that it may actually go down again. So I don't want to get involved in this. All right. So let's do one more. Money Center Bank, J.P. Morgan, which looks better, certainly better than Bank America, but it doesn't have all that dynamic a look to me. All right. It just doesn't. Now the moving averages are pointed up. Looks pretty good from that perspective. It looks like it made a significant low. It's pulled above resistance, but to me, the pattern itself looks like it's going to have to do more work. Maybe come back and test the averages. Maybe come back in a little lower, test down here. I don't know, and I'm not sure how FinReg versus quantitative easing, how that plays out in terms of J.P. Morgan. I do know that J.P. Morgan will benefit from QE2 just like it benefited from QE1 all through here, where it gets very cheap money, can turn around and lend it if it chooses to do so. And so in fact, from a QE2 perspective, maybe J.P. Morgan is a relatively safe play. Bank of America is less safe, even though it also benefit from QE1, right, and will benefit from QE2. But let's compare it with something else. How about this? This is Regions Financial Corp. All the averages. It has a W formation in here, base formation, right? And the averages are here. It looks like it's consolidating for a move up. And it looks to me as though Regions Financial is probably going up to retest these highs at $8.75, $9. Very dynamic play here. Very powerful uptrend.